silver is strategic. And there's an initiative in Canada by mining companies and banks to have Ottawa reclassify it as such. And it should be. I think it is strategic. You have 8 commercial banks in the West doing their damnedest to hold the price down. And that's been shown over and over and over again with 700-800 million ounce shortfall, or short position rather, on COMEX, a 4-year structural demand supply deficit in mine supply. Between 4 and 6 billion ounces short on the LBMA, which is a much more opaque market. That's why we don't know exactly how much, but estimates say between 4 and 6 billion ounces by that same cast of 8 or so Western commercial banks, a platform where they're trading 290 million ounces of silver per day, which is basically the entire float of the LBMA, which has 800 million ounces, of which 500 belong to the ETF. So they have 300 million ounces that are unencumbered. They're basically trading the entire stash every day, yet they admit that those numbers that they publish of 290 million ounces traded on average per day are 10 times understated, as they only post the final settlement number. So in essence, they're trading 3 billion ounces of silver per day on average, which is 3.5 times annual global mine supply. The numbers, the price discovery on silver are not known. And I mentioned in our last interview about China, Sean Kunkun says, he's the CEO of Dolly Varden, that indeed they are flying all around Latin America buying the silver concentrate and the silver doré directly from the miners and refining it, paying up to double what the West will pay, and then bringing it home and refining it there. They are the largest, China is, second largest producer of silver in the world as well. The fact Russia is now saying we're going to accumulate it, I don't know of another country that's done that. It's a very big deal. Look at India. In the last few months, they imported another 150 or 60 million ounces of silver. They've bought close to 900 million over the last 4 years. They're little by little draining the world's exchanges. And you look at this coordinated effort between India, who's been on a nonstop accumulation tear, China is the second largest producer and now is flying all around the world buying doré and concentrate, and Russia, who is now adding it to their national stockpile along with palladium and platinum, and they're the major production center for palladium and platinum there in South Africa. It's a big deal, and I think being naked short in this market as a commercial bank is an existential threat, and I think that's one of the things that these countries know. The BRICS talk about building a grain exchange. And in the discussions, the gentleman who was tasked at developing it publicly says, we produce and consume more grain than they do in the West, yet we have no ability to control the price. It's controlled on COMEX. Development and rollout of the BRICS grain exchange, that will change. Well, they're building the BRICS gold exchange as well. And with the development, of course, and the actual accentuation of the Shanghai Metals Exchange, which over the last half a year, when you add the cumulative volume of the Shanghai Metals and Futures Exchange together, it's surpassed COMEX. It's the number 2 most heavily traded platform in the world. These exchanges are gaining legitimacy, unlike COMEX, where bars are rehypothecated, 15, 16, 1700% or more, sold over and over and over and over again, where if you stand for delivery, 1 out of 17 will be lucky to get delivery, if not much more than that.
Silver has been historically viewed as a monetary and industrial metal, but in today's geopolitical and economic environment, its role is rapidly evolving into that of a strategic asset. This transition is not accidental. Key global players, including China, Russia, and India, are actively repositioning silver from its industrial categorization to something much more consequential. Historically, the manipulation of silver prices by Western banks has suppressed its full potential. 8 Western commercial banks are reported to hold between 4 and 6 billion ounces of paper silver short positions on the LBMA, a staggering number that dwarfs annual global mine supply. To put it in perspective, these banks trade approximately 3 billion ounces of silver daily, which is 3.5 times the annual mine supply. Such activities are not only counterintuitive, but also unsustainable, particularly in a market experiencing a 4-year structural supply deficit. Despite this artificial suppression, Eastern powers such as China and Russia are leveraging this opportunity. China, the second largest silver producer globally, is purchasing silver ore and concentrate directly from miners across Latin America, paying up to double what Western buyers are offering. These transactions bypass traditional markets and reflect a significant strategic move to accumulate resources. Russia, known for its dominance in palladium and platinum production, has announced its intention to add silver to its national reserves, signaling its recognition of the metal's growing importance. India, often overlooked in discussions of silver, has quietly been a massive accumulator. In the last 4 years, India has imported close to 900 million ounces of silver, with another 150 million ounces in the last few months alone. Together, these three nations are orchestrating a silent revolution in the silver market, draining Western exchanges while using suppressed prices to their advantage. The Shanghai Metals Exchange, over the past 6 months, has overtaken COMEX in cumulative volume, becoming the second most heavily traded platform globally. Unlike COMEX, where silver bars are rehypothecated multiple times, the Shanghai Exchange requires each contract to be backed by a physical bar, laser-etched for authenticity. This transparency and rigor provide a stark contrast to the opaque practices of Western exchanges. As these Eastern exchanges gain legitimacy, they are effectively dismantling the dominance of Western price discovery mechanisms. Sovereign nations are slowly but surely building alternative financial structures, such as the BRICS Gold Exchange and other resource-focused platforms. These moves underscore their collective intention to bypass the dollar-centric financial system. Silver is not just critical for green energy and electronics, it is indispensable in military applications. High-tech weapons, from Tomahawk cruise missiles to advanced radar systems, require significant quantities of silver. For example, each Tomahawk missile contains approximately 500 ounces of silver. Yet this strategic demand is conspicuously absent from supply-demand reports by institutions like the Silver Institute. Why is this omission significant? It highlights the strategic importance of silver in modern warfare while exposing the vulnerabilities of nations dependent on it. Russia and China understand this implicitly, as evidenced by their aggressive accumulation strategies. Meanwhile, Western banks remain entrenched in short positions, creating a precarious situation should physical demand spike suddenly. The suppression of silver prices by Western banks, while benefiting Eastern buyers in the short term, is ultimately a ticking time bomb. Bart Chilton, former head of the CFTC, once revealed that massive short positions in silver contributed to the collapse of Bear Stearns in 2008. Today's concentrated short positions are even larger, posing an existential threat to the banks involved. If these positions are unwound, or if a sudden physical shortage occurs, the repercussions could be catastrophic, not just for the banks, but for the broader financial system. The coordinated efforts of nations like China, Russia, and India to accumulate silver are not random acts. They are deliberate strategies to secure a critical resource. The implications for Western financial systems are profound. As these nations continue to drain physical silver from global exchanges, the long-term viability of price suppression becomes increasingly questionable. For investors, the message is clear. Silver is no longer just an industrial metal. It is a strategic asset with the potential to redefine global power dynamics. Ignoring this shift could mean missing one of the most significant investment opportunities of the decade.
You look at Shanghai, in order to buy or trade a contract for silver, you have to buy a bar directly from one of the 6 or 7 approved refineries. They laser etch a number on the bar that is directly attributed to a certificate. It's transparency, it's authentic, and it provides, a confidence in a system where our Western rehypothecated opaque system does anything but that. See, these countries understand it's the Achilles heel, and they're slowly draining the exchanges rather than go in and buy everything up that they could and would end it just like that. They're playing the long game. And now that you see Russia jumping into the mix and saying, no, we're going to start to accumulate it for our state, this puts some of these Western banks on notice. And I'll tell you, to be naked short to that degree is enough to bring down a bank. And I talk about, Chris Marcus's interview with Bart Chilton, where I think everyone should watch that. Chris Marcus, Arcadia Economics, where, Bart Chilton, the head of the CFTC, admits that when Bear Stearns failed, part of the reason they failed is because of their massive short position in silver, which went from $21 an ounce to $9 an ounce, and they failed. Now, I don't know if that was the primary driver, but Chilton says, look, they called Jamie Dimon into the office and told him he needs to take, this position over. And Jamie said, well, we'll be in violation of position limits. And they said, Bart Chilton said that Hank Paulson and Ben Bernanke said to Jamie, that's okay, get your house in order. Here's a period of time to do so, and all will be good. Fine, he says. Well, at the end of the time period, Bart Chilton went into his supervisor's office, which would be Hank Paulson or Ben Bernanke, and said, look, they're in violation of our agreement. They didn't pare down their position. In fact, they've increased it. They need to be prosecuted. And the answer was, back down, Bart. It's a political decision. Now, he died a week or two later. Was it a man clearing his conscience who knew he was close to death, or was it something more nefarious, or was it just a coincidence? I'm not going to say, but what I am saying is that this was enough to bring down, or partially bring down, a bank like Bear Stearns for being on the wrong side of that trade. And Bart Chilton, the former head of the CFTC, all but admitted that. What does it mean when you have these Western banks massively short trying to hold down silver with a 4-year-long now structural supply-demand imbalance, and then all of that omitting, as we've talked about before, the military's role in all of this? There is no mention of military in the supply-demand fundamentals, and yet there's copious amounts of silver in all of these high-tech weapons, as we've talked about before. So yeah, I think it's a massive deal, and in fact, I think it's strategically being done, and I think it should be something that puts these Western banks on notice that this is not a smart thing when you have sovereign nations and sovereign wealth funds that work on behalf of these countries that are using the suppression, jiu-jitsu, if you will, using the leverage of your opponent against them. That's exactly what they're doing. And that's why they're not bitching yet, because they're in the siphoning phase. We'll siphon as much as we can at these stupid prices, because it is a strategic metal and it is not industrial. It is strategic. And if you realize that, yes, it's needed in green and digital and electronics and all that stuff, but it's also needed in a military capacity. And to me, that's why India, China, and Russia, are hell-bent on accumulating it, because it's far more than just industrial.
The ongoing strategic accumulation of silver by Eastern powers signals a seismic shift in the global balance of power. Silver is no longer just an industrial metal. It has evolved into a crucial strategic asset that underpins efforts to establish a multipolar world order. As the dominance of the US dollar erodes, silver and gold are being positioned as key elements in the foundations of an alternative financial and economic system. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been actively working to decouple their economies from the dollar-centric global financial system. These countries have made significant strides toward creating independent mechanisms for trade and investment, including the development of the BRICS Gold Exchange and other commodity-based trading platforms. These moves aim to diminish the influence of the Western-dominated COMEX and LBMA exchanges, which have historically played central roles in determining the prices of precious metals like gold and silver. Silver has emerged as a key component of this strategy. As a metal with both monetary and industrial applications, silver serves as a bridge between the financial and physical economies. The BRICS nations understand the importance of silver in facilitating technological advancements, renewable energy initiatives, and military preparedness. By accumulating physical silver and developing their own price discovery mechanisms, these nations are laying the groundwork for a more equitable and decentralized global financial system. China's approach to silver accumulation is nothing short of strategic genius. The country is already the world's second-largest producer of silver and a major importer of the metal. What sets China apart is its willingness to bypass traditional markets and deal directly with miners. Chinese companies are reportedly flying to Latin America to purchase silver d'or and concentrate at premiums of up to double what Western buyers are willing to pay. These transactions allow China to secure silver supplies while avoiding the constraints and inefficiencies of Western financial institutions. China's emphasis on transparency and authenticity in its trading platforms, such as the Shanghai Metals Exchange, contrasts sharply with the opaque practices of Western exchanges. For example, the Shanghai Metals Exchange requires that every contract be backed by a physical bar of silver, with each bar laser-etched and accompanied by a certificate of authenticity. This level of rigor has made the Shanghai Metals Exchange a credible alternative to the COMEX, which is plagued by rehypothecation and other questionable practices. Russia's recent decision to add silver to its national reserves is another game-changing development. Known for its dominance in the production of palladium and platinum, Russia's move into silver signals a recognition of the metal's strategic value. This decision aligns with Russia's broader strategy of diversifying its reserves and reducing its reliance on the US dollar. By incorporating silver into its state reserves, Russia not only strengthens its financial position, but also sends a clear message to the global community. Silver is far more than just an industrial commodity. It is a strategic resource that can bolster national security, technological development, and economic resilience. India's role in the silver market is equally significant. Over the past 4 years, the country has imported nearly 900 million ounces of silver, with an additional 150 million ounces imported in just the last few months. This relentless accumulation is draining Western silver inventories and contributing to the structural supply deficit in the market. India's motivations for stockpiling silver are multifaceted. On the one hand, the metal is indispensable for the country's burgeoning solar energy sector and other industrial applications. On the other hand, silver serves as a hedge against economic uncertainty and currency volatility. By amassing large quantities of silver, India is positioning itself to navigate the challenges of a rapidly changing global economic landscape. Silver's importance extends beyond its industrial and monetary applications. It is also a critical component of modern military technology. High-tech weapon systems, advanced radar systems, and other military hardware rely heavily on silver. For example, each Tomahawk cruise missile contains approximately 500 ounces of silver. Despite this strategic demand, military consumption is conspicuously absent from official supply-demand reports by institutions like the Silver Institute. This omission raises questions about the transparency and reliability of these reports. It also underscores the strategic importance of silver in national defense, a fact that is not lost on countries like Russia and China. The over-leveraging of silver in Western financial systems represents a significant vulnerability. 8 Western commercial banks hold the largest concentrated short position in any commodity, with estimates ranging from 4 to 6 billion ounces of paper silver short on the LBMA. These positions are unsustainable in the face of rising physical demand from Eastern powers. The collapse of Bear Stearns in 2008, partially attributed to its short position in silver, serves as a cautionary tale. If today's concentrated short positions are unwound, either due to regulatory pressure or market dynamics, the resulting price surge could be catastrophic for the banks involved. Such a scenario could trigger a broader financial crisis, undermining confidence in Western financial institutions and accelerating the shift toward Eastern-led alternatives. The coordinated efforts of nations like China, Russia, and India to accumulate silver are not just economic strategies. They are acts of geopolitical positioning. These countries recognize that silver is a strategic metal that will play a pivotal role in the technologies and economies of the future. Whether it's in renewable energy, advanced electronics, or military applications, silver is indispensable. For investors, the implications are clear. Silver is undervalued, and its price does not reflect its true strategic importance. The current suppression of silver prices by Western banks represents a rare investment opportunity. As Eastern nations continue to drain physical silver from global exchanges, the likelihood of a significant price revaluation grows. The transition to a multipolar world order is reshaping the global silver market. As Eastern powers build alternative financial systems and accumulate strategic resources, the dominance of Western financial institutions is being challenged. This shift has far-reaching implications for investors, policymakers, and businesses. For investors, the message is simple. Silver is no longer just an industrial metal. It is a strategic asset with the potential to redefine global power dynamics. By recognizing this shift and acting accordingly, investors can position themselves to benefit from one of the most significant transformations in financial history. The narrative surrounding silver is changing. Once dismissed as a mere industrial commodity, silver is now recognized as a strategic asset with profound implications for the global economy. As Eastern nations continue to accumulate silver and build alternative financial systems, the metal's importance will only grow. Investors who understand this shift and act on it stand to benefit immensely. The current suppression of silver prices is unsustainable, and the long-term outlook for the metal is overwhelmingly positive. By positioning themselves strategically, investors can capitalize on the transformative changes taking place in the global silver market.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.